right, the Indian markets have traded flat through the day but made a late run to end the session on a positive note. The Nifty ended above the 18,100 mark while Sensex gained 65 points. For the week, Nifty advanced for 3 weeks in a row to end a volatile week, up over 1.9%. Over 80% of Nifty constituents advanced, and you had good advance in sectoral indices as well. The Nifty rose around 8.3 during the quarter, ended September 22-23. On the other hand, the MSCI Emerging Markets Index fell 12.5%. The Nifty outperformed the MSCI EM Index for an unprecedented 10 straight quarters. So where exactly is this strength coming from? It's a question Nikhil Kamath, co-founder of Zerodha and True Beacon, had also asked, and I have him with me on the show this evening. Nikhil, hi, great to speak with you. Tell us what you put this enthusiasm down to. Is it a broader understanding that at the end of the day, returns are to be made from the markets because your other investments are not giving those kind of returns and not even able to beat inflation? Where do you think this enthusiasm and trust is coming from?
Well, it's really hard to discern and kind of point at one thing. On paper, pragmatically, the higher interest rates, unemployment and slowing growth across the world should affect India as well. But we seem to have relatively decoupled from most of the world, both emerging and developed world. I think, you could look at it both ways. You could look at it glass half empty or half full. One good way to look at it would be, the consistency in India and the foresight that we have had in policy decisions in many ways might be playing out today, and a lot more people are interested and optimistic about India today than there have been in the past.
The India story seems to be, the narrative right now at least is, we're better off than the rest. While the UK is now officially in a recession, we know that the US is grappling with decades high inflation. We also have high inflation, but the narrative seems to be that we're the bright spot in the world, even at 6-7% growth. Do you think that's actually percolating down to the retail investor level as well? And is this kind of support being pushed by the retail investor?
Well, see, the retail is a small segment of the market overall when you look at it in terms of the open positions that exist. I would say retail impacts the market to a factor of maybe 10%, but not more than that. What promoters are doing, how much foreign money is coming into the country, how much capex the government even is taking on. These things typically move the markets a lot more. One fairly noticeable trend in the last couple of months is FIIs for a long time were selling, and they seem to have reversed, and they've started, coming back in and investing again pragmatically on paper. Cost of money has gone up significantly for them, and debt is available today at very attractive rate of return. So you can't really point to one thing, but maybe a culmination of many things, and the whole demographic opportunity that India still is by virtue of how young we are and how underpenetrated many industries are. That might have something to do with the money coming in as well.
The reasons seem to be unclear, but in terms of cues that you're watching out for, Nikhil, the China story played out a bit in the markets today. Hopes that some of those COVID restrictions will be lifted, things will ease up there. Is that a big factor to watch out for?
Well, even when things do open up in China, I think sentimentally the damage is done. I think most large companies, even because of the geopolitical tensions in the world today, everybody seems to be looking for a hedge against China, and India, for many reasons, seems to be that hedge today. And hopefully that will be another tailwind in making Indian markets do better. But just from a valuation point and from a relative standpoint, most parts of the world have corrected a good 30-40%, and India is 3% away from all-time highs. And even from a price multiple standpoint, we are in expensive territory today. If you were to map historically how well Indian markets have done, and Let's say you use something like a Buffett indicator and map market cap to the earnings of the company, I feel we sit in very expensive territory today. I would say, maybe like 85% of how expensive we were at the peak. So it is a scary place to be. One has to also wonder, does it make sense for a foreign investor who's agnostic to the region to reduce allocation and enter NASDAQ, for example, where valuations seem to have gotten a lot more reasonable now today? So people will have to kind of wait and watch out for how these events play out.
So, broader view on investment, you're saying Indian markets are expensive right now. I was going through your Twitter timeline and you have very interesting comments on real estate as well. So, real estate, which is an old favorite of Indians as an investment piece, you're saying is also going to get tough. EMIs are going up and valuations are not matching up. So, then what's looking interesting?
So, well, to be candid, I think I'm a fairly pessimistic guy. I'm very conservative in the way I invest. Of all the asset classes that are available today, real estate looks least attractive to me. Outside of the fact that the demographics, population is becoming older, fertility rates are dropping, interest rates have gone up significantly and look like they will in the near future. I mean, if Fed is raising, we invariably will maybe lag the curve, but we will have to raise as well. I think the one big factor which people don't account for when buying real estate is the illiquid nature of the asset. With debt, with fixed income, with equities, with gold, all of these asset classes, tomorrow me and 10 of my colleagues or the people I have around me, my peer group, we can all liquidate together and we would probably be fine. But when one tries to do that with real estate, the problem is a lot more acute, and in that the illiquidity really kicks in very quickly. We have not had such a situation in a long time. Uh, One could argue that ever since India opened in the 90s, real estate has seen a one-way bull run. The last decade might have not been spectacular, but prices have only trended upwards. We don't have the hindsight of corrections in real estate which have happened elsewhere in the world, like 2008, or if you go back in time in the 60s or the late 20s. So the Indian mentality, our diaspora very much believes that real estate is almost an asset class that can never fall in value. Even if you talk to real estate developers, a lot of them will tell you that real estate has never gone down, and it will probably never go down at any point of time to continue to rise. When
Messages
you
there. No,
see,
but mixed messages there, Nikhil. You're saying you don't like real estate. It's the least attractive, but you're saying it's trended consistently upwards and it's not going to go down.
no,
So,
I'm saying people believe it will not go down, and that
okay.
makes it scarier as an investment class. Because when you have 100 investors investing into one asset class, believing it can never go down, the day it corrects, I think that correction will not be minute. It will be really drastic.
Yeah. Okay. So Twitter. So you're saying that real estate is that bubble, which is perhaps waiting in the wings. Overall, what would be your outlook, Nikhil, as we move on to the end of this calendar year? We're pretty much where we started, I would say. Russia, Ukraine, still looming large. Energy impact still there throughout the world. A lot of major nations in the world prepping for a recession in 2023. India may be relatively better placed. How would you look at it going ahead? Is your pessimist self coming out more or your optimist self?
Well, if one were to be a chart reader, I think May, June, July, August, September, this tends to be the dull period, and everybody has a Santa Claus rally leading up to December. So, ensuing Diwali as well. That's one way to look at it. I think inflation and real estates for me are a much bigger factor than people are giving. I don't think people are giving them the attention that they warrant. Uh, Typically, the only tool we have against inflation is raising interest rates to a point where it is above inflation in the hopes of containing it. And historically, inflation cycles have not been multi-quarter but multi-year, and these are things which last for many years at a time. So if inflation were to continue to stay high or go up, and interest rates, it hasn't happened in a long time, but if you go back in time, maybe you look at the Federal Reserve under Volcker, and interest rates at one point were as high as 17, 18%. Even if we don't get to such a drastic scenario, but if interest rates go up 30, 40% higher from where we are today, maybe another 200, 250 bips, uh, there could be many problems across industry. Many sectors in India are fairly levered, and servicing that interest could eat into their margins. And I think that will have repercussions for stock prices across the board. While I'm saying all this, let me be sanguine and again compliment India on the strength that it is portraying. I don't mean to paint such a negative picture, but I think retail investors have to be cognizant to the situation globally, and also be cognizant to the fact that we have held up in a world which has corrected significantly. And maybe now is not the time to be piling on more risk, and maybe now is the time to diversify and secure some of your gains, and get into safer asset classes as a hedge.
Just one more point. The flip side of rising interest rates, and business hates it, industry hates it, but it's great for savers. The good old deposits, which also the average Indian loves, at least give them a little more. Do you think that
Yeah, I mean,
helps at all, or it's just all wiped out with inflation?
I think if the interest rates were significantly higher than inflation, that argument might hold true. But in the current scenario, I think we're still lagging inflation. And in my own view, we are lagging it significantly. So I don't think that would hold true for today.
So glass half, glass full, depends on how you want to look at it. But Nikhil, as always, joining us with a pragmatic view. Great to have you on the show.